All right, another day, but no dollars. Today was a sit on your hands kind of day, and as you can see in the 15-minute chart, we really didn't make much headway throughout the day. If you're looking at where my arrow's pointing, so we opened up and then we traded in this range, and we just broke out in the afternoon, and not really much of a breakout. So it was just a day best to sit on your hands. Look, here's the opening range low. Here's the opening range high, and we just kind of traded inside of that for most of the day, and then in the afternoon we kind of made this little move to the upside. But really, I'm attributing this to the Fed decision, interest rate decision next week. So I'm thinking this is just going to be a dead few days. Yeah, I was just thinking that I might even avoid some spread trades going into next week, and just wait and see what happens with the Fed, because who needs some surprises, right? The name of the game is to mitigate risk. So if you look at the daily, we're going to close in a strong bar moving up. I'm really uncomfortable with this momentum, but we'll see what happens. You know, I would like to see it break this high right here, and be more comfortable. If we roll over here, then this divergence in momentum would trigger down around the 229 area, and I think at that point things are going to look ugly. So what I would like to see it just continue its march up, but what I'm expecting really is a consolidation, maybe a higher low, and then a break above the high, and we'll just have to see how we wrap up the week tomorrow, what that bar kind of tells us. But right now I'm just staying relatively neutral on the market. It's grinding up. I'm going to let it run. I don't see any good swing trade or anything like that. I definitely take the trade break in that high right there, and like I said, I'm kind of looking for a consolidation and making a higher low, and then a nice trade would be breaking that high. But it's got to lay out. We can't trade in anticipation. So what do we have here? Look at the Dow. The Dow is going to look exactly the same. All the indices are going to look the same. So no matter if you're playing SPY, if you're playing QQQs, this is what it's all about. You know, it's all about the same thing. And really, I would recommend that you just sit on your hands and wait for this market to turn around and wait for better opportunities. You try to play these swings inside of this consolidation, and you just get chopped up, or you don't know how to trade and you're just hanging in trades and hoping things work out. And yet, you know, that's not going to do you too well. Eventually, that's going to come home to roost. That's the Dow. Here's the composite. I'm expecting it's going to look the same, but we're waiting for data. Again, this is off-grid trading, and this is what happens when you trade off-grid. Sometimes your data is a little slow. But if you're new to the channel, hit the subscribe and hit the bell so that you know when we're up in broadcasting. And we're streaming 9 a.m. until about 12 o'clock, and really those are the best hours to make your money. And if you trade alongside with us, you'll find that in the first 15, 20 minutes, maybe a half hour, we make bucketfuls of money, and that's it. Why work harder? Why work the rest of the day? And hit the like or the thumbs up, and really kind of tipping your host. So we're looking at the composite, and it's all bullish, but I'm going to be bullish to neutral on everything, and it's the same exact pattern right here. So we're just going to have to see how this plays out. You know, we have this divergence in momentum, which is just telling you that you know, the silly guys are trading right now, and the big guys are kind of hanging back and not really putting a lot of money in the market. And just waiting to see. You have to figure that you have this uncertainty about COVID and shutting down the economy, which I really don't think is going to happen. And you have the Feds out next week. Smart people are just saying, we'll just let it all play out and then get back involved. There's always another trade around the corner. No need to jump in on things. So looking at bonds, right? Here's bonds, and this is really just a indice for bonds, tracking the 30-year interest rates. And I mean, we're in a downtrend on the daily. You can't argue that, and the momentum is down, but it looks like it's kind of leveling out right here. So just based on fundamentals, I'm looking for this to turn around. I mean, that's giving me a bias. If you were playing the trend on bonds, you got to figure bond prices are going to rise up because interest rates right here are in a downward trend. So, you know, if you were playing the trend, you would be playing bullish on bonds. But that's contrary to really what should be going on right now. So this is a very unusual situation. This is interesting to watch and see how it plays out. And this is kind of a lesson you could take going forward in your trading career if you are going to be an actual trader. If you're just chasing the hype, then you could just skip right over this portion. So anyway, we're obviously, I mean, you know, we're bearish on it, but I would avoid the trade and just wait and see what happens, because I really expect bonds to turn around and start going down, which means this would turn around and start going up. The interest rate would go up. So that bees the bonds. Let's take a look at Bitcoin. Oh, there it is. That's the close. The market close, pretty much where it was when we were doing this end of the day wrap up. I started a little bit early, and oh, look at that, my clock appears incorrect. All right. Yeah, it's my internet. Come on, how many? Oh, okay, I guess it's for every damn chart I got out there. We're looking at BRTI. Oh, all right, I lost my focus. This is Bitcoin, and it's an indice on Bitcoin too. It's not the actual Bitcoin, my view hasn't changed. You know, it looks like it's leveling out though, this momentum. So I think it's going to turn around. I don't think you're going to get that upside trade, but I would look for it right around breaking the 41,311 mark, and that's where I would go long. But this looks like it's fading off. I don't really see. I don't see the short, but I'll tell you what. If you want to go short, I would. Well, see that fell apart too right there. I mean, I would have been bearish under that line. It just looks like it's going into a consolidation. I think everybody's trying to figure out what's going on. I'm going to have to say I'm neutral. Well, actually, you know what? If that line didn't work, then you could remain bullish. Above that, breaking that line, you would be bearish. Or breaking that line might be a good short. But it's still, I mean, it's still in a upward trend. Even on the 60s, it's bullish on the 60s. So I think it's short-lived though. I would probably hold out on Bitcoin, wait for a break of that trend line, and then you know, go short this thing. And then we're looking at NVIDIA for one of my free folk, and I don't know if he's still in it. He didn't give me an answer today, but I'll just do it for him because he's a good dude and he participates a lot in on the channel. So hey, I'm bullish breaking that line. That's on the 60. Looking at the daily, it kind of looks like the indices. You know, pretty much the same pattern. So you could watch it. That could be a reversal doji right there. But I would stay bullish, or that's the 15-minute bar, and or chart, and you could stay bullish as long as it doesn't break that line. At the break of that line, you might look to go and be a little bearish. And last but not least, which actually I got to tell you, it's kind of interesting to watch this thing play out. But here it is, boom. And I think we said yesterday that we would go short, or I would recommend a short breaking the low of yesterday's bar. And here it is. It broke the low. Wasn't too aggressive a move, but and that would be an aggressive entry, breaking the low of that bar. But a more conservative entry would be to enter breaking the low over here, which apparently is 31.15. And I'm kind of confident you're going to see it. I'm sorry, apes, or rocket people, or whatever it is you tend to call yourselves. But Yeah, I think you're going to challenge this, and if you break that 3165, I mean, I think you got a good move down to the 1440. And just keep in mind that whoever was short this was is probably why this accumulated here. They probably shorted more up here. You know, fundamentals haven't changed on the company. If you ask me, the CEO is a moron. Just one man's opinion, and fundamentally there's nothing to it. You know, I think that this guy, I mean, he went out and bought theaters, which were the greatest theaters in LA, but it seems like he's acquiring a bigger piece of an ever shrinking market, which is like rule number one to avoid. You know what not to do in business, and that's you know, get a bigger piece of a shrinking market. So anyway, I think this is a solid short. You know, I mean, I look at it for the squeeze. It has nothing to do with the fundamentals, but based on the fundamentals and just the business model and the management, if I were to assess the company, I definitely, certainly wouldn't be long the company. I'll tell you that, as far as an investment goes. If I was a shorting firm, I would certainly be encouraged, especially after this run-up. So again, I'm pretty convinced that all this accumulation right here, this consolidation, was the shorts selling to the apes. You know, because you can't short if you have nobody to sell it to. You just push the price down, and the short will happen on your selling power, and you don't want that. So they took their time. They had this nice accumulation. Matt Cole and all his cronies who are pumping the stock kind of encouraged everybody to buy it up here, and the shorts, who are, mind you, PhDs in economics and statistics and fundamentals, probably raised their cost up to that area. I mean, it would be a good short. I mean, at this point, they probably, I mean, if they were in at 12 and they averaged out at about 60, so you're talking, let's call it 10 is 50, 48 points. After that is 24, and 12 is, their cost is probably 36. So the shorts are probably break even right about now. Yeah, I definitely go with that armchair analysis of AMC. Sorry to say, I mean, it would have been nice if it worked out, but it doesn't look like it's going to. But again, one man's opinion. All right, so anyway, that's it. I wish I could end on a happier note. We did talk about a long and take a break and keep your stops tight and everything like that. But you know, the story's changed, and the story could change tomorrow. I mean, there could be buying power that comes in on this, but on a technical basis, pretty much I would consider that the average short is about $36, and the momentum is dying off, and you know, they're about to get profitable right here and ride this thing down. And unfortunately, people load on to a profitable position, so there'll probably be some more selling coming in. So anyway, watch your bottom side and keep your stops short. I appreciate you stopping in. Hit the subscribe and hit the bell so that you know when we're streaming. Join me at 9 o'clock for half a day of trading, because that's all you need. And the reason we decide to be traders is so that we have our time and our freedom and get to enjoy our lives, not so that we're strung out and stressed out and staring at the screen and watching every tick. You know, trade smart, trade comfortably, and good luck with your trading.